Death and debt. It's something you do not want to think about. Unfortunately, they're tied together. Nearly 75% of Americans die with outstanding debt, such as credit card balances, mortgages, car loans, and student loans. Well, in this video, we'll tell you who is responsible for your debt after you die. I'm Kirti Gosai and welcome to Indian Money's YouTube channel. So who's responsible for your debt after your death? It's a horrible thought, but when you die, your debt may live on after you. If you pass away, your debt will typically become the responsibility of your estate. This estate consists of all the property and assets you own. So first, we'll go through the basic steps that are followed in most countries. So once you pass, your estate will enter probate, a court-supervised process that identifies and gathers your assets and pays off your debt. If there is any money left after paying the outstanding debt, remaining assets are distributed to your beneficiaries. In general, no one else is responsible for repaying your debt after you die, with a major few exceptions. The first is a co-signer. If you had applied for a loan with a co-signer, that person is typically obligated to repay the entire debt after you. Second is a joint account holder. If you had a joint account, such as a shared credit card with a family member, the joint account holder will be responsible to repay your debt. The third is a spouse. In some states, spouses are required to repay some forms of debt. In community property states, the surviving spouse may have to use community property to repay their partner's debt. Now let's come to the types of debt your loved ones may have to repay. The first one being auto loans. Auto loans are secured loans that the car you purchase with will serve as a collateral. After you die, your estate will have to repay the car loan. If it isn't enough money to cover the debt, the lender can repossess the vehicle unless a family member or a friend takes over the monthly payments. Second is the credit cards. Credit card and balances cannot be inherited unless you had a joint account holder. However, your estate will have to pay off your balances before your heir can get any money. Third, the mortgages. If you die and have an outstanding home loan, your surviving spouse, if any, can take over the payments. Other heirs can inherit the home but will not inherit the mortgage. They can't be held legally responsible for making the payments. However, that does not mean that the mortgage will just disappear. The mortgage will have to be repaid from your estate or the home will have to be sold. Any money that is left over from the sale after satisfying the debt will go to your heir. An important point to remember, the banks are not within their rights to force their heirs to pay the outstanding amount. However, if no actions are being taken by the heir, banks have the right to seek repayment from the legal heirs by disposing of the property involved. Banks are well within their rights to auction the property to recover the dues and return the excess amount of money if there is any heir. Fourth, the unsecured loans. For unsecured loans, the personal loans and credit card loans, the banks have the right to claim all the outstanding amounts from the legal heir of the deceased. If no mutual settlement is reached with the bank, the legal procedures may turn in favor of the bank, asking each legal heir to pay a part of the outstanding debt as per the inheritance received from the deceased. However, they may get some relaxation in terms of interest if they are proven to be genuinely unable to repay the debt. The fifth, the student loan. If you have a federal student loan and die with the balance still outstanding, your family can apply for a loan discharge due to death. Federal loan discharge applies to all direct loans. For a federal loan that a parent takes out on behalf of their undergraduate child, the loan is discharged if either the parent borrower or the student dies. If you have a private student loan, the rules can be a little more complicated. Discharge terms can vary from lender to lender. Though some lenders will discharge the debt if any student borrower dies, not all do, and your estate will have to repay the loan. Lenders may also release a co-signer student loan if the primary borrower dies. However, the primary borrower is usually responsible for continuing to make the payments if the co-signer dies. If you aren't sure about your lender's term, review your loan and contract. Now coming to personal borrowings from family and friends. Money borrowed from family and friends unless accompanied by a legal document has no legal repayment obligation. Such borrowings, if it is based on mutual trust only, the heir of the deceased only have a moral obligation to repay such loans. On the other hand, if any such loan is accompanied by a legal document, then the liability will depend on the required clause incorporated in the legal document. Here too, the heir may have to consult a lawyer to safeguard their interests. Now coming to the fact who looks after such affairs. Banks have a legal cell that looks after all such affairs of default or dispute, and it may be futile to fight against the banks legally as laws are stacked in their favor. The best way out is to negotiate with the bank and distribute the outstanding loan amount equally amongst all legal heirs to ensure quick and early closure. Banks often are flexible enough to give the legal heirs some time to ensure loan repayment. Now here is a trick. Having enough life insurance to cover your debt is one way to protect your family financially. If you have any form of debt such as a mortgage or a student loan and are worrying about how your family would afford to repay it if you die, a lifetime insurance policy could help. If you have a life insurance and you pass away, your beneficiaries will receive the policy's death benefits. They can use the money to repay off the debt and cover their funeral expenses and pay off for their living cost. When you're young and relatively healthy, life insurance premiums can be inexpensive, so please do research and consider. Now being absolutely India specific, an executor is responsible for dealing with the debts. If the estate of the deceased person did leave a will and had mentioned the executor, then he or she will be responsible, and if there is no will, an administrator will be appointed by the court to deal with the deceased's estate and debts. Well, debts are also paid in chronological order. So the first to be paid are the secured debts. Secured debts means that the debt is attached with any asset as security. Secured debts are paid off at first before paying any other debt. If secured debt is not paid, then the lender has the option to sell the asset mortgaged for, availing the debt. Example, mortgage loans. Then comes unsecured debts. These debts are paid after secured debts and are paid off if there is enough money left in the estate to pay the debt. Example, credit card debts. So here's a thing to note about the credit card debts. The unpaid balances of the deceased's credit card holder will not pass on to others. Relative, heirs or spouses are not responsible for the credit card outstanding balances of a deceased person unless it is a joint account. The joint account holder is liable to pay off all the outstanding balances of the credit card even if all expenses were made by the deceased person. Mortgage loans. If the mortgage loan was taken jointly in the name of a spouse, then the spouse is responsible for paying the loans after the death of the spouse. Personal loans. This will be repaid after paying all other debts. And then comes tax. Income tax on the income arrived or inherited to the heirs after the death of the estate. Tax on the value of the estate of the deceased will need to be paid. What are the steps to be followed while the debts are being paid off for a person who is no more? First, make a list of debts that are outstanding for the deceased person by verifying all the documents and papers available. The second step is to check the nature of the debts, whether it is a secured debt, unsecured debt, individual debt, or a joint account debt. The third step is that the creditor needs to be intimidated that the concerned person has died and the debts are being paid off with the estate of the deceased. The fourth step is that if there is any insurance policy taken by the deceased person to settle the debts, then the insurance claims can be used to pay off the debts. Well, I hope this video has clarified the doubt that you have. So before we wrap the session, let's go through some key points. Nearly 75% of Americans die with outstanding debts, so please refer to this video again to find clarity. Second, debt doesn't always die with the borrower. Co-signer, joint account holders and spouses may be responsible for repaying it. The third, life insurance is a way to help your family to pay off the debts you leave behind. With that, it's a wrap on this video. Please do like, share and subscribe to all the videos of Freedom's Financial English channel. And for more information, download the Freedom app in the description given below.